Greetings, Dr. Jeffrey Scott here. This is my weekend market update. This might get posted on the 2nd, but I dated it the 3rd. Going to get this part out on Friday, Saturday morning. I've got an event to present at 11 o'clock Saturday morning Eastern time, and then I'll worry about the stocks sometime on Sunday. So the stocks were mostly higher on Friday, and I was actually going to title this was actually better than it looked. But when I look back at the holiday season and the Santa Claus rally would be the last 5 days of the year and the first 2 days of the new year. So we've got one more day. But I would say Santa Claus has been a relative downer. Overall, the market was down a bit on the week. We'll look at that. And it's really what's the next catalyst? Is there a rate cut coming? Will there be tariff relief? Um, will we go to war in Iran? I doubt that. So a lot of things out there, and we're going to look at the markets and see if we can't make head or tail. Again, my name is Dr. Jeffrey Scott. My email is marketmripro@gmail.com. My Google group is Top Down Trader, and my website's marketmripro.com. This is for educational purposes only. Anything we talk about on any of these calls should be considered education and not investment advice. I do these videos to demonstrate the tools that I've developed for top-down analysis, how I apply them. Trading involves risk. You are solely responsible for any investment decisions you make. I may own or intend to buy or sell any stock mentioned in this report. Trading stocks and options should be considered risky and should always consult with your financial advisors before making trades. I have tools in multiple platforms, and we'll look at some of mostly Market MRI Pro, the app today. If you're looking for the wealth charts video, I've got tools there as well, and I'll do that video later Sunday night, early Monday morning after we get some futures. This one is being done late Friday, so obviously I have no futures. I hope I have a future, but I have no future data. My Google group is called Top Down Trader. Love to have you join it. That's what I use as a mailing list, inviting you to otherwise closed groups. You get additional discounts on my tools when they're not at 50% off pricing like they are right now. Just go to Google Groups, click all groups, find the group you want to join. Mine's Top Down Trader. Let us know how you want to be contacted. And the best news as somebody who sometimes hates some of the things that I do is you can leave by yourself. You don't have to ask permission. You control whether you're part of the group or not. Um, you know, I think the question will be this year, will we get a recession? The second year of the presidential cycle, especially with the lame duck president that we'll have in the last 2 years. But the second year is tough. You expect the sitting party to lose seats, and that might be concerning to the market. But we're also recovering from a yield curve inversion and the economics realities that we face. And every time the yield curve inverts and goes below the black line, whether I'm looking at 10 3-month or 10 minus 2 months, it's ultimately followed by a gray bar, and that gray bar doesn't have to be immediately, and that's a recession. So we've crossed back above. I think a recession could happen. I think right now it feels like it would be light, but we'll have to see. Is the Fed ahead of the game on rate cuts, and is that going to prevent a recession but lead to higher inflation? Or are they behind and going to accept some recession to keep the inflation down? I don't think I know the answer to that. Now, I will look for things like credit tightness to start shooting up even before we enter that recession. No evidence of that right now. And then the Philadelphia Fed diffusion, which only comes out um, once a month. The last data we had was December was minus 10. We've got data coming out this coming week. And if it comes in minus 20, I'll get more concerned because if you look at most of these gray bars, they're occurring in the midst of a minus 20. News and earnings in yellow are a bunch of old things. On the ISM, maybe that's current. I couldn't tell if that was old or current. But December employment probably is current. ISM, job openings, factory orders is old, as are the job openings. Then we have jobless claims, which is current, and then we have old trade deficit, productivity, and consumer credit. And then we've got the monthly employment data, and that's going to be a big mover. We also got consumer sentiment on Friday as well. We got some Fed speak. Richmond Fed is speaking twice. It'd be interesting to hear what they say. Will they talk up the odds of a rate cut? Will they talk down? Will they sort of toe the party line and be kind of neutral? Earnings, we have nothing on Monday. They start to come in Tuesday. Next week is when they start in earnest, but there's still some significant earnings here. And it's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. Those that are fans of marijuana, not me. I make comments about their ETF all the time, about how little these stocks are. So a 10% move is nothing. Might be interesting to see what Tilray talks about at their earnings. I remember when this stock was over $300, I was at a wedding and I was introduced to some Tilray millionaires. I hope they sold their stock. I don't think they did from what I hear. It's a judgment call to hold stocks over earnings dates. It's bad judgment to not know when your stock's earnings date is scheduled. I did announce at a meeting courtesy of Tick Blaze, thank you, Sean and Ashley, that we did last week on the 30th, that I was going to keep my price down through January 5th, which is Monday at 11 p.m. The regular price on my tool that I'm showing tonight is $26.95. I have the same indicators in TradingView, but I don't have the scanners. The TradingView is a very skinny package compared. And I mentioned that I'd be doing a webinar tomorrow, which I'll mention more about in a second. It's a 3,200 value. Forget even that. It's 2,700 for the tool, even if you don't care about the trading view. And I kept the Black Friday price of $14.95. When we get after 11 o'clock on Monday, the price will go up. Maintenance therapy will be no more than $4.95 year two, and hopefully we'll be able to keep it at that level, but that depends upon data costs. There is a Jumpstart webinar. Tomorrow I'll put the link in the remarks section on YouTube and in the Top Down Trader blog, or whatever we call it these days. It's from 11 to 2, and it's really going to be me in the program looking at how I do my analysis, looking at every layout, talking about it, talking a little bit about how you build the layouts, etc. On the 31st, for owners of my tools, I'm going to do a mentoring session, and that will be a deeper dive in sort of what goes behind how I trade, um, and we'll review the final performance for 2025, which was very good, triple digit. Um, and I'll show you how with the types of trades. We'll talk about option trades, but that's not to the end of the month. The Google group Top Down Trader, I post the videos from all these things. I don't necessarily put them on YouTube, especially if I'm discussing performance. And then you get access to my layout. So that is $14.95. I've raised the price from a $19.95 base to $26.95. Based upon what you're getting, it's still a bargain. And that means the $14.95 probably won't be seen again. On to the charts, and right now I think we're still up in the air on the Orange County meeting. I speak a lot there, but I don't organize it. However, I am going to do something like I did this past year in Palm Beach Gardens, probably late October, early November. I've got to see how some of my meeting schedules work through to see what's the best weekend, and then I'll let people know through Top Down Trader. All right, so I said it felt better than it looked. I could tell you, market opened up. It looked to me like it was going to be a really good day. Then I did a support call, gentleman from Canada, and then lo and behold, it looked like a really bad day. And then next thing I looked, I was up, and it turned out to be a good day. I think that the software sell-off really spooked, but at the end of the day, semiconductors were on fire, and probably were responsible for a lot of the improvement. And then just look at this right here, data centers and digital infrastructure was up 4% in one day. And if you own uranium, if you own Micron, if you own the SSD companies, if you own the electrical infrastructure companies, so many things were up probably because of that, the shift back to data centers. If we look at the market, Bitcoin was up 2.6%, actually up over the last 5 days, 3%. Russell led to the upside on the equities, up 1.06, diamonds 0.64, spiders 0.19, and the Qs, interestingly, mostly because of software, Apple didn't help, down 0.19. The dollar was up 0.3% and volatility was down. Over 5 days, you could see that Bitcoin led us higher, and pretty much except for the dollar, everything else was down. One thing that I like to see is some of these equities, the Russell, the diamonds, um, were closed really at the high of the session. So it really wasn't an equal day. Small caps, mid caps, and diamonds did better than spiders and Qs. And a lot of the stocks in those that did well are probably in the NYSE. If we look at the new highs minus new lows at 52 weeks, woohoo, we turned positive on both the NYSE and on the NASDAQ. That's important to me. Again, that goes in the category, it was better than it looked. Um, because you need new highs on stocks to build new highs in the markets. They don't get new highs, should not be built on the backs of new lows. Doesn't seem to me that if we do that, you'd have stable new highs. All right, if we look at participation, top bar is sectors. That would be Monday versus the prior day, which is Friday. Friday versus Wednesday. My bad. Industry groups Friday versus Wednesday. Advances 65% in the S&P 1500. Not as strong perhaps, but much better than the day before on the NASDAQ, and 57% were up. And similar on the NYSE, a big improvement compared to Wednesday, 65% of stocks were up. So I would say that when over 60% of the stocks are up in general, it's a strong day in the market. So a strong day in the market, except for that NASDAQ. What led? Well, energy is a big component of data centers. Industrial build-out's a big component. Materials, utilities led. What lagged? Interestingly, tech was up 0.23. So it was up, but it wasn't super leader. Again, probably brought down by software. And if we look down below, the big laggard was discretionary and communication. So not the whole tech world was happy. From a thematic, uranium, clean tech, solar, China, blockchain, data centers, all up 4% or more. Metal and mining, semis, aerospace, autonomous vehicles, social media, Reddit had a great day. China, infrastructure, lithium batteries, oil explorations, and global robotics were all up 2%. So a lot of big movers. Is this a makeup for what we saw the last 10 days? Maybe. What lagged? Software was down 2.9%. Actually opened down 3.63, came back some. Cloud computing down, cybersecurity down, Dow Jones Internet, cybersecurity were the ones down more than 1%. So pretty localized damage, and what I think was otherwise a pretty strong market day. Is it enough to tip away some of the bearishness that we've been seeing? And just about that, one of the IBD meetups, or formerly IBD meetups I watch, is very much into market timing. And they came out today and said 0% exposure. And there's an interesting debate going now about that. Why? Because if you go to investors.com, which is the IBD website, they're still talking, I think, 40 to 60% exposure. I did mention yesterday that I raised cash. I deployed a bit of it today, but I'm still pretty heavy in cash. If we look at the timing briefing and we start with the daily, and I talked about this trend line, I talked about false breakout, hoping that we'd hold at this line here, which is the 30 period WMA. We'll look at the index in a few minutes, and we actually held there. Now, the interesting thing is all four of these are in a sell signal: Spider, Qs, Diamonds, and Russell. So on the daily timing model, everything says we're headed lower. However, we got some bottoming tails on the daily of each of these. Even the Diamonds got back above the WMA. So are we bouncing already? We might be. If I look at the weekly, everything's still in a buy. And in fact, only two, the bongos flipped to red on the spider and the Q. So we are still in a pullback in an uptrend. How do you know when the uptrend ends and that pullback is worse? Well, you'll feel it in your portfolio. If you're raising cash, you'll see it in your account with a lot more cash. But you don't want to be in a lot of cash when this thing turns red from a timing model, or a lot of, excuse me, you won't want to be with little cash when we go into a sell signal. We're not there on the weekly, so we're still in a pullback and an uptrend. So it's okay to have some longs. And if you're really long-term thinking, everything's in an uptrend on the monthly charts. If we go and we look at the index charts, which is where I really analyze, I only analyze the timing model and the timing brief because I have more data here. So if you weren't watching the last couple of days, I was making the argument that the 17-day exponential and 17-day simple and the 21-day exponential, they do track pretty close together, especially when we've been in a move for a while. And why? Because I use the 17, and the more I watch people like Mike Webster and other smart people from IBD, they talk about using the 21-day EMA. So I was curious at the difference. There really isn't that much. This is the 50, this is the 100, this is the 200. This is three different predictive models of where we think the market's going to go. In the purple is a 5-year seasonality. In the green is 10-year prediction. And the yellow is all the data that we have, which is 20, 25 years worth. So you could see that we are kind of in what historically has been a relatively flat period of time, and then a run up in June, which seems like, no, it's not June, I'm sorry, run up at the end of the month. But over the last few years, we've actually gone higher right now. So longer term seasonality will express some sideways, some consolidation here. Short term, we've actually done better than that. So I like to get a sense of what to expect in the market. I'd love to see us take out this trend line. Right now, a big bottoming tail stopping at the 21-day EMA. That'll make the IBD folks happy. On higher than yesterday volume, um, and we were up or down rather, we were up on the spiders 0.19%. If we look at the Qs, not as beautiful in that you got a red candle there, which means we were down on the day, and we were down 0.19. I guess we added the C to tell you that it's closed. Okay. You could see the seasonality here. I only got the 10-day. Actually looks pretty good, but I could add, let's add the 5 and add the 30. So somewhere in my indicators, I will have seasonality. Double click on it once, double click on it again, close this up. And now I'm going to open up the gear, and I should have some more seasonalities here. So I'm going to go, that's 10. Let's do a seasonality for 5 years, and let 5, and we're going to start today. And then we're going to do all starting today. And then I'm going to come down here and I want to differentiate the colors a little bit. I should standardize these, so maybe I will later on. Now I'm going to hit OK, and now you could see all three pop up here, and they all suggest maybe a little pullback, and then we go higher. So sometimes the first 5 days of the year see some profit taking. So that kind of what I expected to see today. So the Qs, if I stop with seasonality for a minute, my concern on the Qs is they've broken through the 50. I'd like to see them get back above it quickly. If not, does the 100 come in play? Support and support there. So the Q is a little bit more risky. And I suspect in the Qs there is probably somewhere in there a trend line like that. And then probably another one like that. And so we are coiling now in a very tight range, and we'll have to see which way we break out. I bet we go higher, but we'll see. I think we may have had our little correction, and maybe we run a little bit, but I don't know that for sure. I'm not going to build out the seasonality here. We'll just leave the 10-year on. But you can see the diamonds look better than both. They have not pulled down all the way to the 50, kind of reversed here and closed above the 17 today on decent volume. These actually look stronger. And if I look at the Russell, we'll see a reversal right on the 50. I just love when technical analysis works. And you could see, the trend is your friend here. It's going to go higher. Of course, after the middle of February, it seems to sell off, and I'll add more seasonality to this chart as well. The next thing we look at is the VIX, and the VIX teased us today. It opened up here higher, traded higher, even broke above the 17 and closed much lower, and was down 2.94%. The dollar was up a bit. Now, when you look at this, it doesn't even look that impressive. And when you go down and look at this and you realize how far the dollar is off of its highs, it's just consolidating at a low. And I switched to the DXUSD because there was a distribution in UUP and the data vendor hadn't taken that into account yet. So if you have the platform, you might want to make that change. All right, commodities, and boy, were they fun the last couple of weeks. Oof. Who said commodities are boring? So gold, after running up, indecision bar after a gap up, set up for an evening star, and there you go. Tried to recover on Tuesday rather, broke down on Wednesday, and today it was actually up a little bit. But notice we can't get back above this breakout line here. So that'll be interesting to see. Do we consolidate and then go higher? Probably. Do we break down below the 50? I kind of doubt it, but we'll have to see. I don't know which way it's going to go. Support is here, resistance is here, see which way breaks. Silver had a classical climax run, a breakdown of 7%. I would have thought it was going to come down, and chakra went right up here and had a doji up 4%, and then the next day closed down 6%. So at best, we're consolidating here and working off some of what looks like a pretty excessive move here. Looking here at oil, a open bar means it closed higher than it opened, but a red bar means it was down. It was down 0.29. And really, you take all these things off. Now that I've had more time here, take this off. And I could look at something like this. Um, we fell out of the wedge. We failed it. Probably goes down and retests here. Natural gas did what it always does, failed at the moving average and came right back down. The 10-year today was up despite strong equity or decent equity movement. The 10-year was up 0.72 and the 30-year was up 0.62. In my opinion, which is worth nothing, the markets don't like it when it's going straight up, especially when this was going straight up. Okay. I also don't think the markets like it when it gets above 5%. I think as long as we're staying below 5% and we're having orderly movement up and down, I don't think that that's pressuring the market too much right now. Could, but just not right now. The next thing I like to look at is my buckets. And I would say the buckets continue to show a preponderance of stocks at the lower part, but no evidence of an oversold market. Very big difference between the NYSE on the left and the NASDAQ composite on the right. The NYSE, you could almost argue, had a little flag and a breakout today, closing higher, while the NASDAQ pulled back and closed right on the 50. The good news is it closed on the 50. Both of these are the composites. When you look at stocks above the 1750 or 200, you've got in the middle of the range on both. You've come off the highs. And because it was a strong day, no surprise, up down volume, new high, new lows, AD lines and up down volumes are positive on both. And we don't see any signal. One of the things that I discussed today on the phone was we still have these Hindenburgs sitting out here. Now you could argue that we've already sold off and they don't mean anything, but they're good for 30 days. So I'm not giving up my concerns. If all we had was this, I'd say we're doing better. Here, a little bit less, um, what's the word I'm looking for? I don't feel as good. I'll leave it at that. If I look at the larger market breadth and I look at that 13-week new high, new lows, and it's the green box next to the green line, 0.33 on the spiders, 0.35 on the S&P 1500, 0.36 on the NASDAQ, and 0.29 on the Russell. During major bottoms, which we're not in, you don't have major bottoms when you're within a couple percent of the tops. But at major bottoms, it will get lower. This may have been it. Why do I think we might bounce from here? Look at the nice little bounce up on this indicator showing more new highs are coming in, which typically means the market goes higher. You can see that the AD line on the S&P 500 has held up pretty well, as has the S&P 1500, but not the NASDAQ nor the Russell. So maybe we got a little bit of a bounce coming here, or a continued bounce after today. When I look at the sectors, anything come up and look interesting to me? Well, Bitcoin's not a sector, but on the timing model, it actually went to a buy today. This communications is still super strong, although maybe not the strongest day ever today. You can see pulling that towards that WMA, and this is a daily model. Materials have done well. Energy holding on okay. Financials consolidating right above the WMA. Industrials was the star today, just standing up like that. This is one way to look at them. Okay. Interestingly, utilities, and probably because of the data center story with CEG, among others. I don't know if OKLO's in the utilities or not, also turned green. If I look at the ratio charts, here's your materials, here's your communications, and here's your industrials, the big leaders. If I go into the stock timing, and I do this really, so I just force myself to look at the big boys and give my thoughts. Amazon, I thought we were going to break out and go higher here. We opened higher, traded higher, fell hard, came back some, probably pulled down with software. We'll see. I'd like to get back above that yellow line quickly. Remember, the yellow line is the 30-period WMA. I've got the 21-day EMA on it as well. Next one I look at is Apple. Apple, again, same thing. Traded higher, looked great, and then sold off. Came back a little bit at the end. Wasn't down much on the session, but man, that was disappointing. Google, a star. It was up, I believe, on the session today, although it closed lower than the open. Isn't in a buy yet here because the daily bond goes red, and this is a daily chart. but looks constructive. Meta broke down today like Amazon and Apple. Netflix, another down day. Tesla, I was watching it when their orders or deliveries came out. They actually traded up a couple percent. And then as the day went on, despite the fact that alternative energy did well and robotics did well, Tesla sold off pretty hard. And I'd be careful of it right here. And then NVIDIA, the strength of the market today was semiconductors. So NVIDIA had a decent session. White candle, so it's up. Here was the prior close. Now, if you want to see where the strength was, you just look at semiconductors. And you can see a big move up here. And if you look at semiconductors and semiconductor manufacturers, you're going to see charts that look like this. And if you want to know where the pain was, we look at the MAGS ETF, and it kind of looks like several of those charts. So Google's holding up, NVIDIA's holding up. Let me put this back to NVIDIA, but not a whole lot more. If we look at, let's see, Microsoft, couldn't hold and broke down hard. Not much love for the big cap techs, but the market itself was up. LABU was a disappointment. It started the day higher, like a lot of things, and closed lower. Came back from its lows. Is it broken? Question. Pharma, which has more pricing, less pricing concerns, because they've cut deals and that they're not bringing, they're not like a small biotech that has no products that's priced on future revenue from products that are not yet approved, discounted. Traded lower, closed higher. White bar means higher. Open bar closed above the open. Data centers, kind of looks like semiconductors. They're back. Got to figure they're going to come up to at least that level. And then these guys had a nice day today as well, the quantum computing theme. So I like doing these charts, not because I find the timing model to be that important on these things. I buy things based upon the charts, not because of a timing model. But it really gives me ability to look through these really quickly and see what the price and volume action are doing. If we go into the JAS layout, I'll spend just a couple minutes here because I'm going to plan on coming back Sunday with another report. So let's just go into the top-down view. We're dealing with 3,648 stocks. Now, before I do that, I always like to compare. Let's look at the spider over the RSP. So I'm going to look at large cap versus equal weights, and let's see what it looks at. It's trending down. What does trending down mean? It means the equal weights are coming up and doing as well or better than the spider. So I'm going to look at the broad market. I'm not just going to look at a narrow market for my top down. And when I look at what was the big winner, energy, industrial, and utilities. But I'm not going to do that. I'm going to look rather at industry performance. Let's look at the top 10 without looking at their sector. Because semiconductors, aerospace, engineering, hardware, industry, electrical, financial, asset management, retail, construction. 1, 2, 3, 4, 5, 6. Yes, I know how to count. 513 stocks. Let's throw a filter of $500,000 shares and $5 just to make the list smaller. Let's rank them by number of up dots. Let's just see if anything looks interesting here. All right, so the good news is a nice breakout on Taiwan Semiconductor. Its earnings 272 going to come in versus 224, so that's at least 20-25% growth rate, which is about where their multiple is. It pays a dividend that's only about 1%. Seasonality is strong at all three time frames. I think this is up because there was something that came out today that's going to allow some of the chip companies to sell some chips to, I think Taiwan, so that they can help on with their manufacturing. Futu, which I believe is in the financial, I can just go over it, highlight, and it tells me securities, brokerage, and wealth management in Hong Kong and internationally. Um, Breaking out above the 50 here with strong seasonality. It's going to make, I don't know what the next earnings are. The earnings are probably going to be not until March. Futu is one that I like. Look at the earnings per share growth. Look at the PE. Look at the revenue growth per share. Look at the PE, which means I'm going to go to Futu and put it right away on my buy list. Why? Because it's breaking out above the 50. It's got a CPR, gap, volume, breakout momentum from a squeeze, great relative strength in OBV, and it's not extended. VSH, a semiconductor manufacturing, doesn't have the same type of growth rate, has a massive PE. I don't get it. I'll find something I like more. Doesn't mean it's not going to go well. TE, let's just see what TE is. Battery cells for energy storage, mobility, marine. All right. Well, we know lithium batteries were doing well. I guess that's what this one does. It's a cheap stock. STM, microelectronics. Hate this gap. And it gapped up here. I like the others better. ST. Nice run up, pull back, almost got to the 50 and a breakout here. Lots of volume the last 2 days. I like to see that. 86 cents coming in against 76. So a little bit over 12%, about what the multiple is. Eh. SanDisk Superstar. Here's where we bought it, and it's going higher again. Here was my double momentum play. We talked about it, drew the line there, and that was a great place to get in. SKYT, Skywater Telecommunications, let's see, or technology, what do they do? Semiconductor development manufacturing, all over the place. Serve, robotics. I participated in this run up and got hit by that bar. Got to be careful when these little guys go. Looks like it's ready to break out. Riot, blockchain. Is this one going into the data center business like Hut? And some of the others, you wonder. Engineering, electrical products, distribution, installation, large-scale commercial government customers, as well as data centers. Why did I ask like Hut? Because look at what Hut's done with the same story. Cuervo, not yet. It's below the 50. Poet, rode this one before. Pullback, breaking out, good seasonality. Fundamentals, doesn't make any money. I really like the first two. So I could go through the list. We're not going to do that tonight. We'll come back Friday, on Sunday rather, with 4 or 5 stocks that I like a lot. But holy Toledo. Oh, wrong Wolf. You look, WULF, is that the one I was thinking of? Yeah, okay. When I saw 18 on Wolf, but it's about 13. So that's how I do top-down analysis. In this case, I just took the top industry groups. Let's just go very quickly and look at one of the other ways of using my program. And I am going to, God, I love saying my program. I'm going to kill my filters. And I'm just going to look at 2 types of trades, my A plus trades. These are very difficult to fire. There's very limited numbers that will come in. It's filtered ONDS, Ondas Holdings. What do they do? Private wireless, drone, and automated data. Well, robotics. We knew robotics were strong. Seasonality, eh, kind of sideways here. I like the pattern. I like the fact it's got double momentum dots. I love the fact that relative strength and OBV are taken off. From up, it's only at 70 on the high jump, so it's not too extended for me to participate. Does not make money, but it's got positive change on earnings, teeny weeny revenue, so I don't care about that. I like the chart pattern, and that's been my go-to signal, which is that double momentum. A little bit looser signal is the A's, and the A's is my traditional A trade that I talk about when I do my live education. And we had a lot of them today. Let me see if there's any that I want to look at specifically. GDS, um, what do they even do? Develops and operates data centers in China. Okay, well, it's China, but it's still the data center story. And I talked about it earlier on that 4% move in data center today. Are they waking up? First Solar, it was funny that I own the stock already, but it's breaking out here. And what I really liked about it is its earnings. 521 going to come in versus 365. That's a big earnings per share growth on a stock that has a multiple of 13. Um, it's massive earnings if you look at market search. So First Solar is one I like, and it broke out here, fell back in with the market, and looks like it's ready to roll again. Got so many of these are stocks that I looked at earlier. Western Digital um, and Seagate STX are big winners here because of the data center needs for storage. Teradyne is another semiconductor stock involved in the data centers. So many nice things here. So many that I think I'm going to say goodnight, and we'll talk about more of them on Friday. CCJ, talk about a beautiful chart. This was a good entry today because it only gapped up a little bit and it hit the A plus right away, or not the A plus, the A signal right away. A signal requires being in a squeeze, having either momentum or breakouts. It says volume, breakout, momentum, relative strength, and OBV moving up. And the weekly bongo is blue, like that one as well. Lots to like. Hope to see you tomorrow at 11 o'clock. And I'm going to go what I just did in 42 minutes talking, and it'll take me an hour and a half to 2 hours. And I'm going to show you what every button does and how I use the product and take a little bit about what my return was over the last 12 months. Have a great one.